And the statement also says they do look forward to agreeing a new inflation target as soon as practice.
Good afternoon, Carolyn. Good to see you. Hope you're well. Looking forward to unpicking the Federal Reserve meeting last night, building on that little explanation we had yesterday. So we'll just go through that. I hope you're doing well. Give folks 30 seconds or so to sign on in. Hi, Najam. Good to see you. So we're going to give 30 seconds or so for us to sign on in. DAX is coming into a nice seasonal pattern as well. Not quite yet. If you just look at the DAX here, you get quite a nice hot seasonal period from early October basically all of Q4, 5.63% average return over the last 10 years. If you go 15 years, slightly better. So this could be quite good for setting stops as well, just for this is more for portfolios work. But if you look here, you can see that the maximum drop was 15.51%, and then the next largest drop was 3.67%, but it was still a positive year. So that can kind of tell you, right? Oh, sorry, 8.93%, but it was still a profitable year. So that can tell you there can be drawdown of about 9% in the DAX. So that's quite helpful for swing positioning. No, very nice. Yeah, good spot. You're very good with those weekly pivot points. You've stuck with them. Let's just adjust the setting, just we're waiting for people to come on in. Yeah, very nice reversal. Yeah, good spot. Yeah.
Now seeing the central bank decision from the South Africa, they do hold repo rate at 7% as expected, unchanged at 7% as expected. The vote decision, that was split.
Yeah, nice. All right, hey Ryan, good morning. We're just talking about, Carolyn was looking at the DAX, thinking about taking that after the FOMC. And we're just mourning with her that it wasn't one she took, and we're just looking at nice area, S2, pivot point, swing point, false break on the FOMC, and then bouncing out back into the area. Very nice. I always like your trades, Carolyn. Very nice swing trading, good positions, very patient.
Update on geopolitics via Lawrence Norman at WSJ. Geopolitics says Iran has made a new offer to E3 yesterday to avoid snapback, I understand. One which, frankly, is barely a bit credible. I'm not alone in thinking the E3, quote, the E3 regards Iran's latest proposal as insufficient in substance as it demands far-reaching actions like the extension of...
I still get frustrated sometimes when I was seeing the tide turn for Bitcoin when it was about $9,000, $10,000. And previous to that point, there was the only time people talk about Bitcoin was in terms of terrorism and money launderers. Then all of a sudden there was a piece done on Bloomberg Intelligence, which is like a very respectable piece. And you could just tell all of a sudden with a research house like Bloomberg Intelligence even writing about it. And they saw a case of it being $100,000 in 5 years, and they were spot on. I always found Bloomberg Intelligence pieces very, very good. I'm just going to see if I can find it. And I was looking at when it was 2011. Just see if I can find the article. Where I won't spend long looking at it, but I'll just I can't find it anyway. But that was annoying. Right, let's get stuck in. So dot plot. Now, the key thing with the dot plot, I'm just going to turn the squawk off just while I'm going through this. So I'll keep the news feed on, but I'm just turning off the squawk for a second. Now, so I put in red here the expectations. So you can see here, these are the expectations. So that's the expectations for the rate. That's the expectations for the core PCE, unemployment rate, and GDP. Now, when you look at it, what do we see? So first of all, the reason the dollar sold off initially was the front end of the rates. Do you see? So analysts were expecting maybe the Fed are only going to say 2 interest rates. But as we looked at yesterday, short-term interest rates are priced in 3. So look, the Fed said, yeah, fine, we'll give you 3 interest rate cuts this year, right? And that was the initial risk rally, basically on that, under expectations. Then everything else was in line with expectations. So dot plot was at the front end, in other words, the early interest rate cuts were expected to be more aggressive towards cutting than analysts were expecting. So that is dovish dollar, positive gold, positive euro dollar, positive stocks initially. And that was why we saw that kind of initial reaction. However, start digging into the detail and you look at it. So the PCE inflation was this, right? 3.1 expected, got that. 2.6 expected, got that. But there's 2.3, right? It came in less than markets were expecting, but still, markets later analyzed this. So you couldn't have told this really from this. This is sometimes the way it goes. And they've said, oh, hang on. The Fed don't see inflation returning to target until 2028. So that's why during the press conference, Powell wasn't playing down tariff concerns. He wasn't saying they're all transitory. And interesting, you had Governor Bailey with the UK interest rate decision that's just happened, sort of saying that it's tariffs. It's not that they're not inflationary at all, but it's delayed inflationary pressure. So there's a sense in which central bankers are concerned that inflationary pressure from tariffs, etc., are in the system and are coming through. So that's partly what led investors to say, oh, it's going to be higher for longer. Importantly, the Fed don't see a big drop in the labour market. Unemployment is roughly the same. So if it hit 4.5 expected, 4.4 expected, 4.3. So the Fed are more confident in the labour market than analysts were expecting them to be. So that's higher for longer. And the actual GDP print was slightly firmer than analysts were expecting. So slightly better GDP, slightly better labour market, and inflation still not disappearing until 2028. And that's basically the reaction. So that's why we had now how do you do that real time? That's very difficult. Okay. And remember the short front end of the yield curve, tricky. Now, the nice thing about the tick chart does offer opportunities even on that meeting. So if you look, I was trading this last night and I just used the micros because of the volatility, but where is it? Yeah, here it is. Right, so this is the decision come at 7. There we go. So there's the decision at 7, right? So you got the equity market rallying on that. And then here was your potential entry here. So first of all, did you get any sellers trapped against the second? No. Did you get any sellers trapped about the first deviation? Yes, right? So there was a potential entry there with these buyers trapping those relatively heavy sellers there. And where else were the heavy sellers were also up here as well, trapped, right? So there were a couple of areas for longs there. Sellers getting trapped, enter here, stops were just running under the standard deviation under that level. So it's a fairly wide stop, right? So it's 63.71. But then look, buyers trapped them, sellers trapped again, sellers trapped again. And look, you've got all that run up here from 6670 up to 6685. So that's 15 points. And then, okay, you've got heavy sellers coming in and, you're looking at these big chunks. Where's the big chunk of people? Here you go. Look, all those buyers there before the meeting. How many? That's 647 contracts long. And look where they get trapped. So that's the most amount of buyers there getting trapped here. And do you see how that becomes a turning point? Do you see they become these turning points? Like all those buyers, then the sellers come in, trap them, and it's down this way. So the beauty of this is with the tick chart is you could take advantage of this just using now the problem comes with it is if you're thinking, okay, my stop's 665 and then you don't take your stop and then you wait till 6658 and it goes, that's the danger with it, right? And that's the risk. And then the emotions of handling it can be too much. So, that's kind of the flip side of it. But the reaction that we need to look at today is how the bond market is reacting. And you can see here, that's telling you a lot. US 10-year yields are pushing up. In other words, short, medium-term interest rates, they're still expected to be a bit firmer. So that's what's supporting the dollar a little bit higher at the moment. And you can see the dollar is just making that retracement. Now, it's not like we're suddenly bullish the dollar, okay, at all. But a little bit of retracement is acceptable, could be anticipated. And yeah, here we go. This dollar yen would have been a good trade here. Remember when we were looking at that? Now, if you remember, going back a little bit of time, we had this 50% retracement level we're looking at of this hammer reversal. And on that dollar sell story, there was a sell opportunity at that 149. But I didn't take it because there was Japanese politics that was lending itself towards yen weakness. So now we suddenly have the macro story aligning. Now look at this, as now we looked at Carolyn earlier, and there was a nice rejection in the DAX. Let me just show you what we were looking at here. Nice kind of spinning top. Rejection of these levels. Carolyn,
from JPM on the Bank of England, the bank expects Bank of England to deliver rate cuts of 25 basis points each in February and May of 2020.
Right. You got that false break. So that's like doable. It's like a spinning top. But look at this for a reversal. This is the kind of reversals on the majors that you just want to have locked into your brain. Long tail, bullish body, close within the body of the previous candle, big space to the left. Right, that's a key buy, right? Maybe up to test that 148. Look at that, and you see that dollar yen is moving up. Where is it moving up? In line with the yields. And remember that could be traded in the futures market as well, because of the yen contract is basically the dollar yen. So just look at that, and that's the kind of trade to be looking for when you get that. The macro story shifted, nice reversal, bang. Euro dollar, very pleased that I took my longs off up at those highs yesterday, obviously, but look at the yield spread. It's still pushing up, right? Don't see any reason not to look for longs here. So just going to see what it looks like on the weekly. Let's see. I'll be interested to see how it closed, but as it stands, looking for buying opportunities basically anywhere around there. The 116, 117 would just be a good opportunity there. So I'd be happy to have a pending order at 11700, right? Big round number, it makes it nice and convenient. Now your stops can be relatively tight because you've got this structure here, this bullish engulfing bar, which is a kind of demand level, right? You see how prices shot up from that level. So retracement down to 117, but let's just see, that's the daily. Let's see if there's a weekly pivot point there. That would be okay here, 11730. Right, stops there. I'm happy. I'll be happy to buy in the euro dollar there. We'll have a look at cable in a minute. So that's what to look for, folks. Now, in terms of my trades, I've got Oracle still running, and there's been some good news for also silver. I'm quite happy to buy silver if we get down to 39.40 again. Brian's not here. Oracle holding those longs there. Got a nice seasonal pattern coming up from Oracle, which I'm going to try and hold into. Bit of AI hype. There's sort of rumors that they may be involved with a TikTok deal. So I'm just happy to hold into that. You never know, you could get a good runner. And you can see Q4, quite a good return. So happy with what I bought in. Don't forget Truflation Index. That's still relatively low, around the 2.29%. So just keep an eye on that for general inflation. Looking at pound dollar, let's just have a quick look at the Bank of England here, because we've also had the Bank of England meeting. Now, just seeing what JP Morgan are expecting, 25 in February and May 2026. Right, so bank rate unchanged. The vote, 2 for a cut, 7 unchanged. It was Dinger and Taylor, no surprise. Jobless data is still strong for the US, so higher for longer narrative supports that bid into bonds. The Bank of England, the main focus, I was looking through the notes on this earlier, was the asset purchase facility news, where the Bank of England reduced their bond sale remit by 70 billion, down from the previous 100 billion. So this was a disappointment to some who wanted a bigger reduction. So it's more aggressive quantitative tightening that some people were wanting. The broad impact of this is that it's slightly more dovish. They've got 21 billion active sales, which is tightening conditions at the front end, but that's seen as a technicality, so it's not really getting a lot of coverage. But there's still internal caution, and if you let's have a quick look at short-term interest rate markets, because I haven't looked at those yet. Yeah, see, they're seeing it's slightly firmer than they were a week ago. So the resilience in the pound is just sort of continuing. Now, let's see how the pound dollar player is looking. There's nothing like grabbing me here for the pound as an opportunity. Maybe a little bit of, yeah, see, that's nice. That's really nice, Najam. Like, that's a great daily time frame, bearish hammer reversal. That's really textbook. Long tail, body close within the previous body, big, all that space. People talk about space. See that space here to that side of it. That just makes it all more technically reliable. Just like here, you see with this DAX breakout, see that space, right? You got into no man's land, and that's so. Pound dollar selling, yeah, still makes sense. Is there anywhere technically? Then what I would say is a little bit of dollar strength, maybe still in play, and then maybe looking at a there, like that, because notice this, you see, is testing that nose and that trend line. So if you think about it, that's basically going back up to the entry here. Do you see what I mean? So if you can get back up to 136.10, 13, I'd say that's suitable for shorting today. Maybe a bit higher. Yeah, somewhere here, 136.20 would do it. I wouldn't be chasing it myself, just like I wouldn't be chasing the dollar yen. Buying the euro dollar on the dip, it would be more appealing. All right, folks, now let's go and have a little look at what's going on in the ES. Sellers, trap buyers, so significant. Ryan's pointing out the implied volatility levels. 66673 is what I've got. Did you have the same on yours? Just to check that hasn't been updated. I think that's the same, isn't it? That was the same as yesterday. Just check. Yeah. So the area here is that VWAP with those buyers trapped there. Thanks, Najam. 6535. Yeah. Okay. Yeah, that's correct. Ryan's got 6741. Now, Financial Juice, that's Arno. He's got 6535, and he's got for the high, he's got 6667 and 6733. So he's got these two as well. Yeah. Okay, Ryan. I think this is correct because it's got the same timestamp as well. Thanks, sir. All right. So on the 15th, we got sellers trapping these buyers here. Right. Big area up here. Obviously, we had those sellers come in, and sellers trap those buyers, and we just flushed down. So at the open, hey Brian, just want to have a quick look at gold for you as a good, buy the rumor, sell the facts lesson. This is the area here. It's the 6,700 big number. So basically, we're very interested in selling off that 6697 region. Now, if we go all the way down, we've got value area highs here. Otherwise, we're looking like we're trying to trend lower from the get-go, right? So we are opening above the value area from yesterday, right? But look, clearly, markets are in a bit of a falling environment, and yields are pushing up. Jobless claims were strong, so markets are saying higher for longer, negative stocks. So that's the sentiment. But we'll see how things develop during the session. Otherwise, just keeping a careful eye on that VWAP. That would be suitable for selling at the VWAP because you've got sellers trapping buyers. That's fine. 6697. So that's an area of interest when we start. Yeah, I was thinking of gold, and with Brian here, it makes sense just to look at it. Just a really good example of buy the rumor, sell the fact, right? Because you had this good run up in gold, right, into the Fed meeting, and now you've had the Fed meeting, interest rate cuts signaled 3, right? And remember, the 3 interest rate cuts signaled were they were a surprise to analysts. At 3.8 was expected, they came at 3.6, but still you had to sell the fact. It's just because the psychology, you think about it with ourselves here, we've been expecting Fed cuts, dollar weakness for weeks. So now you can see that when it actually happens, it's like, oh, well, this is the only thing that's happened is what we were waiting for. And even with this, it's a surprise, but short-term, it's not a surprise to short-term interest rate markets, is it? Because short-term interest rate markets, they've been seeing 3 interest rate cuts for some time. And so you just see a good sort of, and you can see a number of us, weren't we? Najam was like, well, shall I buy gold into the Fed? I closed out my euro dollar longs. I closed out my silver longs before the event. And there's some people that are just closing it on the event, So just a nice lesson. It's nice to see it played out like in real time. And now like it's people just shaking out their positions and looking at more advantageous ones. Oh right, well I've managed to talk all the way up to the yeah, nice Najam. Yeah. Well, I closed too early, annoyingly. I missed about sort of $2 of movement in silver. But okay, it was still a great trade, so I can't complain, even though I am. All right then. Oh, good, Brian. It's trading 101, right? It's forward looking. The market's always looking into the future. So the price now is always what the market thinks is going to be in 3 months' time. So once you get that mindset, when things actually happen, you get the opposite reaction. That's why Main Street gets confused. I don't understand this. The Fed cut interest rates, and why did stocks sell off? Why is the euro dollar falling? It doesn't make sense to me. But it's just because it's a very simple fact. You just don't know the forward discounting nature of markets. Once you understand that, okay, it just makes sense. It's not irrational, right? It's rational. So here we are, folks. Gonna make sure Squawk is on, and we're off at the open. Here we go. A few seconds. So let's see where we go here. So 15-minute, just holding in this region. Happy to sell off the VWAP if we get there. Right, so there's some sellers here. Now, if those sellers can trap those buyers here, that would be very interesting. Buyers coming in off this level, a load of them, 764. No time for tea, exactly. No time for tea. Done Bank of England, done the Fed. It's nice to have a bit of volatility again. So actually got a call from an old broker I used to work for recently. They're looking at getting an analyst in again, someone like me, because of the volatility's given them a bit better bottom line. So everyone benefits from the volatility, right? So here we go. Let's just check the delta. It was positive, but we've had these buyers get trapped there. That's 6696, important area. So here we are. Right, down at the point of control, trying to base here on the Globex Open. Don't worry about it, Brian. It does take time. I say it's simple, straightforward, but it did take time. It did take me time. But you will get there. It will just become a second nature thing. It's like anything, it's just time. I know, Najam. Everything's easy when you know how, right? That's the problem. But you get the principle. It's forward discounting. It's looking into the future. I'll have a look sometime and try and dig up a teaching lesson. I've done one on it, Brian. Just while this is faff around, let me just see if I've got one. That's interesting. Interesting to see here. Quite a lot of sellers got trapped here. Do you notice? And we pull back here, and look, buyers have come back in here. So that could be a good little turnaround point there. Do you see that? Maybe that's gonna be a turnaround point here. Chunk of the most amount of sellers really since the open, apart from here. So this needs to go underneath this level to stop them out. That level's still holding, but we've got this near-term momentum downwards, haven't we? Point of control trying to hold. Just notice here what we've seen. Lots of buyers have come in there with all these sellers trapped there. Yeah, it's certainly a good level we've fallen into. Let's look at the TPO. Yeah, it's got kind of that dip day, hasn't it? I'm with you. Yeah. You know, there's not much in it really. The only thing is that the jobs good again, Fed seeing inflation a bit more problematic. The fact that it's September, and if you look at the seasonals for September, they're really weak. It's really notably weak, so just got to be careful of that. And post-Fed, it's pretty bleak. Oh yeah. Well, he's busy today, isn't he? He's I found a video for us, so we'll look at it when there's an obvious break. Right. Yeah, he's over with the UK today. He's being wined and dined by the King. There's some fantastic photos that have come out. UK royal family earning their keep, keeping Mr. Trump in the good books. So here we go. Let's just see. So sellers coming in here, trapping those buyers here, right? So it's up there. Notice again how these buyers got trapped there. Those large buyers just got trapped, and that was the sell. Right, taking a quick sell on the micros there, just with them being trapped. Right now we're trying to go down to that 6675. But it's not as volatile as I thought, really, but probably should have taken a regular contract, but hey ho.
Update on geopolitics from Israeli military. They say it will surely issue a warning to the residents of South
Right, just taking that off down at the bottom. Because we've hit a value area. Now let's see. It's got a 15-minute close coming up, and then that's trapping sellers. But we are into this value area high. Let's just see where we are on the weekly. Weekly's got a little bit more room to run. So I don't mind that if we can get off this standard deviation.